Hello and welcome to Trading with Technical Indicators. My name is James Boyd. Today's date, July 6th. Hopefully you had a good July 4th. Mine was very busy. Lots of family time, so that was good. And I'd like to welcome all of you here today. Silas with us, Sharon, Austin, Cecil, Scott, GT, Will, and many others. We also got my good friend Michael Fairborn in the chat. So just real quick, our topic is on momentum indicators. So we're going to really be talking about kind of what are some things that the investor might look for to try to see and spot big moves before they potentially happen. Now, some of you are actually here today and you might say, does this happen each week? We meet each week, and this session is being broadcast via YouTube. If you went to YouTube, our channel right on YouTube is Trader Talks Schwab Coaching Webcast. You can subscribe for free. That's just a quick reminder on that. And also quickly, also the playlist that we're actually going to show for this class. So let me send you two links out to make sure. So this link is going to send you to this page that I'm showing here. You could subscribe for free. Number two, we actually have also a set agenda or topics, I should say, of what we teach each week. And you're going to see that that is going to be on this playlist that I'm sending to you right now, right there. So just real quick, so if you're watching this live, this is live. And as you'll see in just a sec. Second, if you're watching this on recording, we welcome you. And those are some resources you want to make sure you actually have right offhand. So first off, let's actually go ahead and quickly get into the topic. And so remember, what we're trying to do is find momentum. And we'll talk about why that's important and how we actually try to find that before those moves happen. Now, as we get started, remember that with the information I talk about here today, it's done for general informational purposes only. In our examples, we'll talk about stocks, but if we bring up options, remember that options carry a high level of risk, not suitable for all investors. When we also talk about examples, we will do those in the Paper Money software application for educational purposes only. And also remember, when we talk about investing, we know investing involves risk, including loss of principal. Now, also, when we talk about our examples, we're going to be using the Thinkorswim platform, the software-based version. Let's go ahead and just hop right in. And what I want to do is I'm going to take out just a quick sheet of paper. If I say something, it maybe means one thing, right? If I kind of say and write it down, there's a little bit more emphasis to it, okay? So what I want to do is I want to kind of talk about, and let me ask you this question. How do we spot momentum? I mean, if we were all brand new, intermediate, advanced, and by the way, it doesn't matter if we're advanced or intermediate or beginner, how do we actually spot some of these actually big moves? I was kind of self-reflecting on this, kind of some of the habits, the routines that I like to look at. And I kind of put them in order and kind of said, what are some key pieces? Well, number one, I kind of thought about is it's going to be very hard. We're going to call this really it's really going to be a top-down focus, okay? And that top-down focus, it really focuses around 8 major lists, okay? Now, underneath these lists, there can be like further drilling down, but these are the majors. So for example, I'm going to put the US. Now, some of you actually kind of wrote now. So in other words, one list would be the US list. Now, when I say the US list, what am I talking about? I'm talking about the DJX. I'm talking about the NASDAQ. Not a surprise here. Okay, SPX, Russell. Some of you actually might look at mid caps, okay, mega caps, all the above, okay? Now, I'm going to kind of tell you this, that we have a class on Friday that we actually do. The Friday's class is on ETFs. And if you want to know what those 8 major lists look like not just the titles, but actually what is in those lists, come to the class on Friday at 9:30 a.m. Eastern, okay, where I can show you that list. That's not the purpose of this class per se, but I think the list here, understanding the list so we can try to find the momentum, that is important to distinguish. That's a major point. Now, some of you are not here in the U.S., okay? Some of you are abroad. And I'm going to write world down, okay? Some of you in different areas. Some of you actually might look at, let's say, certain regions. Some of you actually might look in certain countries, okay? So not everyone's in the U.S., okay? And then if you want to kind of hear more about that world, regions, countries, come Friday, you'll see the list I'm talking about. Now, obviously, if we get into kind of more US, we would say sectors, big one. Definitely would say industry groups. And also, we would actually say with this, commodities, if you like to look at those. And I'm also going to write categories. Now, when you say categories, what are you talking about? Well, we would write down, let's say, income. Are people buying more income? Are they buying more value? Are they actually buying more growth, etc.? Okay. And look at those charts and kind of say which one is actually showing a stronger trend and momentum. Okay. Now, so first, you should be asking yourself this question. Do you have a list? So if I said to you, hey, show me your US list, do you have it? If I said to you, do you have a list of sectors? Do you have a list of industry groups? Which ones do you like? Okay. It's going to be hard to actually track momentum if I don't have a list. Okay. And this is something on a daily basis. Don't say we're too busy. Okay. You realize some of the most successful people get so much more done because they do focus. Okay. Now, if we actually talk about it, they focus, and that focus actually causes discipline. Now, the second thing I'm actually going to bring up is weekly charts. Now, these weekly charts, I like to look at those on maybe a Saturday and a Sunday. Okay. So it's not really necessarily, and I would say earliest, sorry for the spelling, earliest Friday, maybe Friday afternoon, something like that. But really, it's Saturday and Sunday. The weekly charts are important because sometimes we don't see what's happening with the daily chart, but we see a bigger pattern on the weekly chart. Okay. So that's when you're looking on the weekend, going through those lists and say which ones are starting to show us a little bit of momentum. Now, the third focus actually in tracking this momentum is really actually seeing setups. Now, the setups we actually call for ourselves, we call it a bounce. I'm going to kind of label this AKA close, cold. Okay. Some of you are brand new, you say, what is that? So I'm spelling it out. Close above high of low day. I'm also going to include here gaps. I'm also going to include here, when we talk about setups, breakouts. Okay. We're also going to include let's just spell it out, moving average crossovers. Now, those moving average crossovers, they could be a bounce. They could be a breakout. Fair comment. Okay. Now, if I actually now start talking about indicators, okay, now indicators. So notice at the very top, we're not looking at indicators first. We're actually looking at top down. We're not looking at a stock because it has a bounce. We're not looking at a stock because of the pattern. And by the way, I need to actually add one more thing here. Okay, that one more thing, I'm going to asterisk this, price patterns. Well, what type of patterns? Well, number one, we would say a bull flag price pattern. We would definitely say bullish triangle patterns. Okay, those would probably be 80% of them. Okay, now you might say, well, what about inverse head and shoulders? Again, I'm talking about the major stuff. Okay, now, so if we're talking about, let's say number 4, let's label this as what are some of these indicators? Now, one of the things I'm going to also include right here, I am going to include, and you're going to see in just a sec, we're going to label here, I'm going to put asterisk, very important, 10-day moving average. Okay. This is going back 25 years ago. Okay. One of the first things I learned about investing, I got to tell you the true story. I went to church one time. Now, don't judge me. I'm going to prove it if you really judge me. I was listening in church. Okay. But I just wanted to finish this article that I was reading, and I couldn't finish that 25-page paper or whatever. And I took it with me to, let's say, the church, whatever. And I finished it in the church. I had a great time. Okay. I finished it, and I was sitting there thinking to myself, I get it. Like, I seriously, if someone said to me, tracking momentum, like just a couple words, 10-day moving average. Okay. And in that article, it just proved what I already knew, but it was actually looking at the statistics of it, the probabilities of it, and just kind of interesting. And nice to know sometimes you're maybe on that right path for yourself. Okay, the 10 moving average. Don't judge me. Okay, I'm testing you. Okay, 10-day moving average. Okay, so 10-day moving average. Now that moving average could be exponential. 20 years ago, we actually used more exponential, but over time, there actually became what's called a whole moving average. And that's just kind of more of a stiffer weighting. It's going to track the price of the stock more closely. Okay. So when we say indicators, I'm going to separate all by itself, 10-day moving average. But if we start getting into the nitty gritty, okay, the one thing I want to kind of show right here is I want to kind of label here Cajold dots, and you're going to see this in just a sec. I'm going to go back to what I said before, price gaps. Let me show you some examples now. I'm also going to include the 10, 20-day highs as signs of momentum. I'm also going to include with this moving average line separation. Now, I'm going to also write here examples like ticker symbols where if you're watching this, you can go back and study yourself. Not a bad thing to do. Large green candles. Okay. Now, I'm not sure if I have examples for every one of these. That's not the point because I want to talk about some, these are historical / recent examples, but we're going to come to some current examples. So if I actually said, let's say, could you show me an example what you mean by these Cajold dots? Yeah, let me write this down. STT and $FTNT. The dollar sign just showing you this is a ticker symbol, okay? Now, first off, before we go to the charts, is this helpful that we write this out? Okay. Number two, if you said, James, these lists that you're talking about, where again can I actually find that? Let's show that just real quick because I don't want to leave anyone hanging out there. Now, first thing what I'm going to do is I'm going to go to this page right here. If you went to schwab.com/coaching, you're actually going to see this page right here. Okay. Now, what's my purpose in going here? Well, if you said, James, I want to follow through with the class on Friday. Now, this is not like, I'm not trying to like stiff arm someone and say, well, just give me the list now. We teach classes based upon the subject criteria, right? This class, Trading with Technical Indicators, it's not a watch list class. But if you said, my gosh, I would love to know about that. Well, let me actually go to just real quick, the on-demand webcast section. And I'm going to give you just right here, excuse me, let's go to live webcasts and virtual workshops. And you're going to see that this Friday, I'm going to send you the link, that class right there. I'll send you this link so you can see the calendar. And the second thing is the class for Friday. Just bookmark it, okay? Kevin and myself will actually do it. And I'm going to actually I'm going to drive on Friday and I'm going to just methodically show you the list and why it's in there. I'm telling you right now, you ain't going to find the momentum if there's not a procedural list that you're going through, okay? That's why I put that number one, okay? So there it is. Now, number two, let's actually go to the example that we talked about. What do I mean by Cajold dots? Why is that actually maybe one of the indicators? Now, first off, let's go to the charts and let's get some work in. So first off, what I'm going to do is I'm going to type in STT. Now, if you did not have these charts, it would make me really sad. So I want to share with you these charts. Now, the list of what I'm going to send this to you is I'm going to share this grid of charts and this grid right here. Now, we're just full of extra things today, aren't we? Now, if we take a look at this, that grid I just sent to you, you could go up to the very top right where it says setup. And we're now going to go to where it says open shared item. And all I'm going to do is just copy and paste back what I sent to you in the chat. Now, if you're watching this on recording, I'm going to put this in the description of the video, and I'll just label this as the package 2026. Many of you that come on a weekly basis, you know this. Some of you might say, I don't know this. I want to make sure I have this. Now, what I'm going to do is, if I just say preview that and import that, it's going to come up as charts that we can actually see. It's going to be right here. And all we can now do is just open it up, click on the magnify, or maximize. There it is. There's the charts. Now, what you're now going to see is you got a forward arrow. Okay, we'll explain these charts in just a moment. Don't get ahead of me there. Okay, but that's how you put it on your side. If you want to save it to your side on your platform, go right ahead. Okay, style, save style. And what that does is it's going to actually put that, we just call this the package, okay? Package of charts, in other words, 2026. So we know when it was recently updated and so on, okay? And when we save that right there, we go style, load style, you're going to see that it's right there. Now, this is being recorded, so you can actually go back and watch this and put that in yourself. All right, so now let's actually bring these down there. Let's pull it back up. Now, so when we talk about these Cohold dots, what do I mean by that? Well, remember, we talk about these Cohold dots as really being what we call bullish bounce setups. Now, if you take a look at this on the chart, you'll kind of notice that as this chart was upward trending, one way, not the only way, is actually to get these green dots. Now, I was working with a gentleman who is, I mean, he was very bright. He just didn't have a whole lot of experience. If I told you what he did for work, you'd be like, wow, he's a pretty smart guy. But he didn't have experience in the stock market, okay? Now, here's the deal. He struggled to see the bullish bounce setups. And I said, my gosh, it would just be so nice if he actually had just a way to kind of, asterisk, where those bullish bounces are. The bullish bounces are just really where the stock trades or closes, in this case, closes above the high of the lowest, most recent green candle. Close above the previous day, bullish bounce. Close above the recent day, the previous day's high, green dot. Same thing there, same thing there, same thing there, same thing there. And what you're now going to notice is on the chart, that was what we had. But what you're going to notice is, look at the difference. Look at the kind of the common denominator here. Look at the frequency of the green dots. What does that tell us? Well, you really actually get multiple bounce setups in a short duration of time. If we just swept that underneath the rug and that's boring, we would just be completely misreading the technicals. Shame on us. Now, the one thing we would actually have to say with this green dots as well, the Cohold dots, and I'm going to kind of put those as the green dots that help us read the bounce setup, okay? I'm also going to kind of make mention of, this is where you have 1, 2, 3 red candles. In other words, those red candles, the bearish activity, it doesn't last very long. And that's another thing that we would definitely not sweep underneath the rug. When you only see 1, 2, or 3 red candles, less red candles, the better, okay? Meaning the stronger the momentum, the greater the chance we're going to have to see the bullish bounce setups. Now, show me another one. Okay, sure. So just remember, if we see on the chart, hey, I see the price of the moving average predominantly above the 10-period moving average, the stock price pulling back less than 3 days, signified by the red candles, and I see a whole bunch of green dots all over the chart, okay? That's signs that bullish investors are buying the stock at that point in time. Now, show me the other one. The other one we actually had right here, so we kind of study this together, okay, is Fortinet, FTNT. Now, Fortinet, if we take a look at this, this has been one of the areas we have been talking about, okay? Cybersecurity. And on this chart, what you're now going to notice, I'll just zoom in on some of the recent price action. Just littered all over this chart is we get a green dot right there. 1, 2, 3, 4, 5, 6. Now, in that length of time, look and see how many red candles we got in a row. Answer, no more than 3. That's why we actually put that in that little section we wrote down. So what you're going to notice is, again, another sign of bullish momentum, okay? Now, so that kind of is what we talk about, seeing bullish momentum, these potential big moves. Now, when you say big moves, what are you really talking about? We're talking about probably moves, probably double digit or higher, okay? Probably within, let's say, 2 to 3 weeks-ish, okay? Could be earlier, could be later, right? Thinking double digit percent moves in maybe a 2 to 3 week time frame. Could be bigger, could be less, okay? Now, price gaps. I'm going to write one right here. Now, you might say, well, why is this important? The price gaps, STX, if we look at this on the chart, STX, if we pull this up, when we saw Seagate Technologies that was going to the upside aggressively, a lot of times you would see the stock in the morning gap to the upside, gap to the upside, okay? Gap to the upside. What's causing those gaps? What's causing them? It's people lined up buying in the overnight session or in the early morning. They're not waiting until the doors open at 9:30 a.m. Eastern. They're smashing the buy button before the official time of the market opens. That's called the AM session, okay? And you're also going to see that on this chart, there's multiple gaps. And a lot of times as technicians, we just, I'm not really that interested. Show me the CCI indicator. CCI. Okay, you're missing the point. Okay. Now on the chart, we actually see in this case gaps all over the chart. He or she that sees more gaps sees more bullish momentum. Now, if we saw those gaps on the chart where the stock from the previous day's close to the next day's open, if there's gaps on the chart, could that also tell us that there's on the bottom these bullish bounces? And just say yes. Just do it. Say yes. 2, 3, 4, 5. So could that be another indication of momentum? You better believe it. Okay, now, James, don't get so upset. Here's the thing. I think if people were just told this right up front, they'd catch it sooner. Okay? Now, and there's nothing worse than when you feel like you just missed out. A lot of people think I need 10 trades a month to really do, like, to move the portfolio. Not necessarily. You might just grab 1 or 2 for the month. Everything else breaks even. But if it was those 1 or 2 that did the damage to the upside, hopefully, that you got that bullish momentum, or bearish if you played a bearish trend. Now, the other thing I want to kind of bring out here is these 10 or 20-day highs, and I'm going to label this on the charts, okay? Now, what do I mean by this? So if I said, hey, I struggle to actually see momentum on the chart, well, the proof of momentum is the stock is hitting brand new highs. Now, a lot of times as investors, we just don't see it. Well, so we just don't fall into that trap. We're going to go into the second chart in. Now, what is this chart showing? Well, I'll be happy to tell you. Now, I'm going to use the SPX as an example. Now, notice the SPX. So on this chart, we're the second chart in. So you can follow along, okay? Second chart in. And what you're going to notice is we get this orange line, blue line, and gray line. Now, what is the orange line? The orange line is showing us the 10-day high. You can see 10. What's the blue line? It's the 20-day high or 21-day high. And what you're now going to see in this case, so by the way, when you say the 10-day, how long is that? Well, 10 days, 10 trading days, okay? So 2 weeks. When we say, let's say that blue line, 21 days, 1 month of trading, not calendar days, okay? 1 month of trading, because you got Saturday and Sunday, etc. Okay, just give me the trading days. And then if you look at, let's say this one, the 55-day high, now we're talking about 2.5 months. So think of the orange line as short term. Think of the blue line as more intermediate. And think of that gray line being, let's say, intermediate to longer term, okay? Now, what's the point of this? Well, the point of this is if I'm looking at some charts and I'm noticing that all of a sudden we're actually hitting the orange line, those short-term traders are starting to attack the stock and smash the buy button. If all of a sudden they're actually, that candlestick is hitting the orange and the blue line, the shorter term and the intermediate investors are trying to get in. Now, what happens if it's actually hitting? Now, by the way, what happens if it hits it that day, the next day, the next day, the next day, the next day, and the next day? Well, the more times you hit it, it's just literally like the alarm bells going off that it signs of momentum. Because if it was that strong, it would probably be hitting a high more frequently than not. Now, if you're hitting all 3 lines, the shorter term, the intermediate and longer term investors, they're all trying to dogpile in. Now, do they literally dogpile in? Well, that's what kind of causes that gaps. When you actually get these runs in the price and the stock gets elevated off support, people are chasing the stock, okay? All right. Let me see. So the comment was, second chart doesn't have these lines. Well, let me actually go back, okay? Let me actually just pull this up just really quick, the chart that I sent, and let's see the second one. No, that's what I actually sent. Let me resend it to you. Who said that to me? Alexandro. Okay, so Alexandro, let me just share this grid with you. And let me actually just, that's for you. Double check that if you want. But I have that on both. Okay. Now, so if we went back to the third point, right? So I use example given SPX. Okay. SPX on the chart. Okay. Now, if I went to, let's say, the third one. Now, by the way, I think a lot of times people, they overlook this a little bit. Okay. The example I'm going to use is IBM. We label this as really moving average separation. Now, I want you to kind of think about something. You got the ground floor, okay, and then you're flying out of maybe Salt Lake City or something, New York, whatever. And what happens is as the plane actually gets momentum or speed, you get more and more altitude. The plane is getting further and further and further away from the ground. The more separation, the more speed, the more momentum, the more altitude, right? Price altitude going up. Now, the example I'm going to kind of show is on IBM. And again, I think a lot of times we just kind of overlook this. We're like, oh, yeah, it doesn't really look that interesting, but we're misreading it. Example given that I'm going to kind of show right here, some of the stocks that really, when they start to get momentum, they start with moving average crossover. So the first chart that I'm looking at, and the purpose of the shading is to really show us the green shading is when the shorter term moving average, the 10, is above the 20 period moving average. The wider the shading, the stronger the bullish move. Now, opposite, the more bearish momentum. Ooh, okay, if you wanted that, you might like that. But if you actually saw a negative crossover, 10 period moving average go below the 20, the wider the distance between the moving average, the more price momentum. So when I'm talking about bullish momentum, I want that shorter term line getting more and more away from the lagging moving average. So we all follow along. There's the one that's closer to the price is the 10. The second one that actually is the 20. Okay? Same thing here. More separation. This is in a negative way, a bearish way. Bigger separation, more momentum. Momentum is not just bullish, it's bullish and bearish. Okay? James, how long have you been doing this? 30 years. What type of investing have you been focusing on for that long? Momentum investing. Okay? These are some of the things I think I've learned over years. And it's just true. Sometimes we overlook some of this stuff. We didn't realize what it was really telling us. Luckily, I've had some time to actually learn from it. I've learned from stupidity and knowledge at the same time. I learned a lot more from failures than wins. But that's what's actually interesting, okay? Is you want to learn from those failures. Hopefully, you want to be in long enough where you can learn from those and then correct those. Oh my gosh. Now, so I'm talking about separation here. And if we take this actually back and say what happened on this right-hand side, well, you're going to notice right here on the right-hand side, you get that separation. So example given, this is going back to how we started, right? Well, James, when we got that moving average crossover, which we talked about, now I'm seeing the price not pull back more than 3 days, 1 day so far, and then I got my green dot right there, okay? Now, what you're now going to notice is we now start to get into like a price pattern. That price pattern is getting into what we call a bull flag and so on. Lately on this, we've really been making a bull flag pull. The pull that we talk about is the bullish price ascension, which tends to be 5 to 7 days to the upside, okay? And maybe a shallow potential pullback, okay? Now, the last one I'm going to show before we look at examples and go to questions is I'm going to pull back up just real quick pull that back up. There it is. Now, by the way, let me ask you just one more time. Is this helpful that we kind of study this out together before we look at some new examples, okay? Now, here's the deal. Large green candles. Now, last week in this class, we talked about what we called the middle. We talked about sub S1. I'll just type it out. So you said, hey, James, I wasn't there last week. Cut me some slack. I will this time. Support 1 and 2. Okay. And this could really become what we call these higher lows in these big green candles. The example that I'm just going to pull up is Apple. Okay. Now, just real quick before I say this. So, James, let's take a step back just real quick, 30 seconds. How do we find momentum? I think it's going to be very difficult if you don't have a major list broken down by these. Okay. The US, whether you look at world, whether you look at regions, or you look at countries, because not everyone's in the US, you get to specify. If you say, James, I'm really in the US, and I look at sectors, industry groups, commodities, and categories. We said categories is income, value, and growth. Not everyone invests in the same thing. The market conditions can change that cause investors to change what they're investing in. Okay. Now, when we talk about these weekly setups, it's really more of a weekend activity. Okay. When we talk about bullish, when we talk about setups, these are the setups we're talking about to find that momentum. When we talk about indicators, the common denominator in everything that I've talked about is which stocks are above the 10-period moving average. That is the foundational principle and practice. And if we're talking about indicators to help us see that momentum, it's not just one thing. Now, if I saw, for example, stocks that were above a 10-day moving average, could they be showing all of these? Yes. If I saw, let's say, a moving average separation where it was like IBM, could I see something that was showing gold? Yes. If I saw something that was gapping to the upside, is it probably above the 10-period moving average? Yes. So do not think that they're different, but they might show a different pattern where you're trading that. All right, now let's go to work, okay? Now, the example I want to bring up is Apple. Now, last week we talked about who on earth buys an Apple phone because it's just it's cheap, okay? When I say cheap, I'm talking about low price, okay? Now, last week we saw the price go to the upside, and what you're now going to notice is really on Friday, I mean, not to rub salt in the wound, but it did go down to the midsection of the previous day's candle. You know we talked about that. Now, today, you didn't see it come down in the middle of the green candle. Not yet, okay? And now what you're noticing in this case is it only came back to about a fourth. Now, is that a bad sign or a good sign? Well, many investors say, look, if you're not coming down to the middle of that candle, where maybe that moving average is that's upward trending, the investor might be, now here's the deal. This is where people's mentality can hurt them in the stock market. I'm waiting for a cheaper price. The problem when you say that is you tend to be buying stuff that doesn't have any momentum. Okay? Be very careful. We're not buying, this is not going to the grocery store. We're not looking to buy something cheap. We're looking to buy something that has, or consider buying something in paper money for the paper money account, something that has momentum and a trend. Now, example given when you have these big green candles. When you say big green candles, what do you mean? When you look at the green candle from Friday, it should be clear that it's a big green candle. It's not like any other candle on the chart, probably. In that move, it might be 3, 4, 5%, probably closer to 4 or 5% on that green candle. Okay, so that's what I mean by a green candle. It's probably about a 4 to 5% move on the stock price. All right, now, so first off, are there any questions? Okay. Now, I just want to kind of show a couple now, just as I'm kind of fast firing here, and I'm going to go to questions. If we were to, let's say, look at the market right now and say, James, based upon what we talked about, are there any areas that might be showing us maybe those potential bullish momentum signs? Well, example given is, now remember when we talked about, let's say, U.S. markets, right? Well, one of the U.S. markets, we're talking about the S&P 500. And what you're going to notice on the S&P 500, a little break above the diagonal line of resistance. Also keep an eye on the category of investing. Like, are investors buying income? Are they buying value? Are they buying growth? This morning, we actually saw growth reigniting, also along with some of those larger caps and the Magnificent Seven stocks, some of the bigger players out there. Now, the other one we're going to kind of keep an eye on Now, obviously, if we got the SPX, we know that's top heavy technology, okay? But one of the other areas that we've actually had some bullish momentum in is industrials. But we would definitely have to probably asterisk the financials, okay? And if you look at the financials, if we talk about that financial sector, that's been the one that's, again, going back to what we talked about. Can you see it now? Do you see it now? Without me even saying it, okay? When you say, James, am I seeing it? Number one is prices above the 10-period moving average. That's obvious. Second thing is you might be saying, James, I see these dots. Now, if you said, James, I want to change those dots, I don't like those. Can I make them a little bit bigger? Something, a different arrow? Sure. Okay. But there's green dots all over the place. And if there's green dots all over the place, what does that tell us? Bullish bounces. The more frequency of the dots, the stronger the bullish bounces are. Now, by the way, that bullish bounce does not have to be just seen on a chart by itself. Neither does the brand new highs. If you went to, let's say, Market Watch, and if we, for example, said, could I just pull up a list of, let's say, example given, what if I had a list of, let's say, Dow Jones stocks? Do we have to like pull these up individually, James? I got a job. I got 4 kids. Okay. So do I. Okay. So the biggest actually thing is when we take a look at this, the hold, it does not have to be on the chart by itself. It could also be in a column heading underneath Market Watch on the quote page. And so this is going to tell us which stocks are showing signs of bullish bounces. Second, when we talk about the bounces, like seeing the highs, same thing here, okay? Which stocks are hitting the 20-day highs, which stocks are hitting the 55-day highs, and so on. Which stocks actually might be starting to get the moving average separation. There's the moving average crosses and so on. Okay, we get it, okay? Which stocks are actually breaking out. So don't think that, no, we have to look at these individually on the chart. The Market Watch can also go through the list for us, rake out the ones that are showing those setups right now, okay? Now, whenever we talk about scripts, they're not guaranteed for accuracy or timing, okay? Confirm them. Understand what they're trying to look for crying out loud, okay? Now, yeah, well, yeah, well, okay, now I'm really exposed, okay? Oh, man, it's where I usually get in trouble. Okay, I'm gonna try not to get in trouble today. Oh man. Oh geez. Okay, now here we go. If someone said, James, can I change that a little bit? Yeah, let's kind of just put this on the little green arrows. Okay. If we did this, and I'll show you what this will look like. If you said, James, can I just kind of go back to more classic like green arrows? Yeah, sure. Okay. We'll go back to the test tube. Okay. I did pretty well. I could have gotten in trouble right there. Okay. Now, oh, after 25 years of marriage, it's working. Now, what we're going to see in this case, we're going to click on the, where do we click? We went to that little test tube right there. 5 down, you're going to see there's the hold, which we talked about. And now what you're going to see is, if we go down to the very bottom, there's hold. And you could say draw as, and I just put the arrows, okay? Now, if you want it a little bit bigger, give me something a little bit bigger so I can see it on my chart, et cetera, et cetera. Let's go with the 3, apply, and then click on OK. There you go, okay? All right, now, the second question which came in, and it's a fair question, okay? If someone said, the other question which came in is regarding, let me actually slide something over. This would be better to bring up. Now, if you said, where could I actually go to actually find those column headings as well? And I'm just answering the question, okay? The place where I house those, okay, is right on X. I'll put 1 or 2 of them in just so you can have them right now. But in this page right on X, what you're now going to notice is if you scroll down, you're going to see if you scroll down right here at the very top of the page I sent, if you said, where could I get those those hold dots on the Market Watch? Okay. Now, first off, what you're now going to notice is the Well, I'll even say, yeah, there it is. Cohold dots right there. Okay. That right there in blue, that's the script. Okay, for Cohold. If you say, where do I see the 20-day high? It's right there. Where do I see the 55-day high? It's right there. Okay. Where's the crossover? It's right there. So that page you definitely want to bookmark. This is really taking everything I've done in 30 years and just telling someone on the open interweb, have it. Okay. Now, it took us longer to kind of look at it and test it over time. But now let me just kind of give you one or two of these. So if you said example given, can I get that hold out just real quick? I'll send that real quick, pull that up. I'll just send you one of these so you can kind of see what that looks like. And that way I can go to example. Okay. Now, yeah, now the question was, so like example given, when you pull up the chart, okay, how do I know that it saved the chart? Good question. Okay. So if I pull up that chart like we did at first, I'm going to click on the little, all the charts up top. We're going to go down to where it says save grid as. And if you don't mind, I'm just going to label this as the package 2026, and I'll even put the date. Okay. 7/7/6. How do I know if it's saved though? Go back to style, go to load style, and what you're now going to see is, did it save? And if it's saved correctly, it should really be showing in that listing right there. Okay. That's how you double check on your side. Now, what I'm going to do is also, if I go back to that just real quick, there it is right there. Okay. So it's showing the package 20. So we did save it, correct? Now, the other part of this question is, but how do I know that it's saved on the column headings? Okay, now, these column headings, so if you want to save that, go to the very top right, setup, go to where it says save workspace as. Now, when you say workspace, what is that doing? Well, it's saving your watch list on the left-hand side. It's saving the column headings, okay? So that way you don't have to recreate it. So if I say save workspace as, and I'll just do this, same thing, 7/6/2026. How do I know it saved it? Well, if I go save, where we didn't let us do that. I gotta put, sorry. Lived in Europe, you know that you use dots. They won't give it to me. Okay, I'll put 7/6. Let me see if it'll take the little dashes. Okay, there, it did. So if I do setup and I come down to this, there it is right there. So now when I load it back, it should have the column headings and I should have the charts. Now that's kind of important because really, if you're really looking at some of these moves that we're talking about when we talk about bullish momentum, if you knew these things that we wrote down, it would just be a repeat of what you've seen before. And that's the nice thing about the stock market. Now, the other thing I want to kind of make sure that I just make mention in closing here is that high prices aren't bearish. Okay. Now, high prices or prices that are getting higher or prices that are getting higher are confirmation of trend. Okay. Now, a lot of times we think if prices are getting higher, it must be overvalued. If prices are getting higher, there's no way it can keep going up, blah, 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 blah. The problem is that price is going higher is confirmation that other people are reading it and they're trading the trend and the momentum of it. What stops someone from trading momentum? It's between your ears. Okay? It's between your ears. And so the biggest actually thing is you have to understand that if those prices get higher, it's not, oh no, it's hallelujah that other people are seeing what you saw and read it and are trading that trend and momentum. Okay? Now, example given, if we actually came back and let's say we did a class tomorrow and Apple, example given, hits a brand new high, that wouldn't necessarily be a bad thing. That would actually be a positive thing because, well, people are trading that continuation. The one thing I did not make mention of as much, wonder if you get like say a diagonal breakout, which could be a crossover, or you get a stock that is kind of showing a a continuation pattern. Could that be signs of bullish momentum as well? The answer is yes. Okay. Now I'm out of my time here today. This would be a very good class to go back and study. Make sure that you know this and could reteach it. Okay. Now, the big thing to also remember is this class is actually going to be posted on YouTube, the channel, Trader Talk Schwab Coaching Webcast. Any of the things that we actually talked about in the class, if you're watching on recording, I'll post in the description. Now, coming up next, you're going to see that if I went to this page, let's go back to this, it's going to show us the calendar. So if we actually went back to, let's say, live webcasts and virtual workshops, the next class coming up is going to be, okay, covered calls and short puts, Ben Watson. Make sure you have that calendar, bookmark it, and join us on these classes. Thanks to Michael Fairborn, and thanks to all of you. Hopefully today was helpful for you in breaking down what are these key signs we actually look for to try to spot and ride and trade potentially that momentum. Remember that all investing involves risk, and this has been the class on trading with technical indicators. I wish you a great day. I'll be back on tomorrow morning, 11 a.m. Eastern. Stay tuned for Ben Watson coming up next. Bye-bye.